Most investors think they know the Canadian market, but after one trip to Edmonton, I realized everything I thought I knew was outdated. Let's talk about what most investors aren't seeing right now, but absolutely should be. If you've been following Canada's real estate market lately, you already know the landscape is shifting fast. Prices are softening in some areas, rents are surging in others, and new policies are changing the rules for investors every month. But last month, I saw something that most investors haven't, and it completely changed my outlook. I flew out to Edmonton with one of my Vancouver clients. We were walking through show units, taking notes, running numbers. Honestly, I thought I knew what we'd find. But what I saw on this trip, it changed my whole perspective. Where is the smart money going in 2025? One property stood out, a land-rich project designed with one thing in mind, a strong, scalable, investor-friendly performance. Picture this, 2 sleek 3-bedroom townhomes up top, below 2 smartly designed 2-bedroom basement suites, and in the back, 2 light-filled, open-concept garden units. Every layout is optimized, not just for tenant comfort, but for investor ROI. Here's what blew me away. This development is engineered to qualify for CMHC's MLI Select, and that unlocks some of the best financing terms in Canada. I'm talking up to 95% leverage, 50-year amortization, and rates below prime. Yeah, you heard that right. In plain terms, you can lock in stronger leverage, lower monthly payments, and better cash flow from day one. That could be the difference between scaling your portfolio or watching from the sidelines. Quick pause. If this kind of behind-the-scenes insight helps you make sharper investment moves, hit like and subscribe. You'll be joining a growing community of savvy Canadian investors staying ahead of the curve. Now, let's get back to what I found on this trip. Why timing matters more than ever. You've heard the old line, the best time to buy real estate was yesterday. But this isn't just a saying, timing is everything. Right now, Edmonton is still offering 5% down for qualifying multifamily properties. But this window is closing fast. Calgary was in the same position last year. Once demand exploded, minimum down payments jumped to 8% or more. Edmonton is already following the same path. If you wait, you'll be paying more, period. And here's what's tightening the window. One of my clients had to pivot mid-deal when this update dropped, and the rules are shifting fast too. The result? Developers pivoted, inventory dropped, and demand spiked almost overnight. The longer you wait, the more limited your options become. Why Edmonton's multifamily market still makes sense. Despite the changes, Edmonton is still one of the strongest places in Canada for multifamily investment. These new builds are fully compliant with CMHC's latest rules, and the numbers still work. Solid rental demand, positive cash flow from day one, and built to meet debt service coverage ratios, which means lower risk for you as an investor. Those who hesitated missed out, but you don't have to. But every month, the market edges closer to higher entry costs and lower inventory. Don't be the investor watching from the sidelines. So here's the question. What's holding you back from adding your first or next multifamily property to your portfolio? Let me know in the comments. I'd love to hear your thoughts. And if you haven't yet, hit like, subscribe, and share this video with another investor who should hear about this. We've got more real-world strategies, property walkthroughs, and investor insights coming your way. And trust me, you'll want to be in the loop. Thanks for watching. See you in the next one.